me the list ahead of time of the tickers and going through them. There's quite a few on here that just everybody is, wanted me to look at. So I'll try to get through as many as I can, and answer as many questions as possible. So without further ado, I might have to zero out of this screen and share it individually on the next one. But had some issues with the other one with the audio, so I'm gonna get this right this time. So entries and exits, trading stocks and options. Now this is a wide topic to talk about, and I know that there's so much to cover. I'm just gonna try to give it a basic run through of everything and just to try to help you guys really understand it if you guys are having trouble with things. First and foremost, though, too, social media wise, I get asked all the time about having multiple accounts. I don't have multiple accounts. I just have one. It's the same with all of the other providers, Gola, Chris, Crystal, Budget Dog, Ray, Kayla, Kia. We only have one account through Instagram, Twitter, and, obviously they have their close friends and things like that. But these are my only two accounts that I have. Anything else, it's not mine. Just pay attention to the spelling, all that good stuff. So that's it. So with entries and exits, right? I hear all the time, like people are entering trades too late or they're getting out too early. And so a lot of it really is to understand, like, what are the possibilities? What are the possibilities of where can this go from point A to point B, from point B to point C in terms of, your price targets that you set? And first and foremost, what I really want to stress, right, is that when a lot of people jump into trading, they try to learn all of the advanced techniques and the advanced patterns without ever mastering the fundamentals. And the single most fundamental aspect of any trade or investing and understanding how to read a stock chart is purely support and resistance. That's it. Support and resistance, meaning the horizontal lines on the chart, right? That you draw out, whether that's through electronically or you do it by hand, however you want to do it, right? But then when people start getting into drawing trend lines and broadening formations and bull flags and bear flags, if you understand what those are, but you don't understand really what support and resistance is, you're just hustling backwards. You're not doing yourself any favors. So master the support and resistance, because it's super important for being able to catch trades long before they run, and then also being able to, just like Chris says, to get those good entries and then to wait from there. If you know what those are, you're going to have less anxiety when you're trading or when you're trying to invest. And just like now that the bear market that we just entered into, right, you're going to have a whole lot less panic if you understand where the support and resistance levels are and the possibilities of where this could go on in either direction, right? And you can then map out from that understanding your time frame of, okay, what's the minimum that I might have to hold this before it makes any sort of moves, right? So these two are super important. And by the 3 to 4 candles or the days of consolidation for confirmation of what I mean by that is, right, so every candlestick that you see on a day chart is one day, right? Or if you see it on a 4-hour chart or a 15-minute chart or a 1-minute chart, each one of those candles represents 4 hours, 15 minutes, 30 minutes, 1 day, whatever that is, right? So you want to map out, like, what's a real true support level, what's a true resistance level. You want 3 to 4 of those candles going sideways that end up being confirmations for you, right? And when it breaks those highs or those lows of those candles, that's going to be your confirmation of the direction that it's going to go next, right? If it's going to the upside or to the downside. And what I mean by that is, let me come back and share the screen. Oh shoot, what happened? Oh, here we go. I don't know why this doesn't let me hold this here. Let me see if this works. Can y'all see this SPY chart? All right, cool. So, everybody's audio levels good. Cynthia, you can hear? Everything good? All right. So just for instance, right, and I just mapped this out ahead of time with SPY, with these vertical lines just as place markers when I'm talking about these 3 to 4 candles, right? So this is from the April 7th to the April 22nd time frame, right? This here, this little box, right? And just drawing support and resistance, right? So you see all of these candles moving sideways here, right? And then you see this candle coming to the downside, right? So that changes the direction. So it really starts as these, you know, if you even go back further, right, you see these candles, these 3 or 4 days right here, and then you see these come down, and then it goes another 3 or 4 days, right, and then it comes back over here, right? So it really that consolidation period starts right here with these 3 candles essentially, right? So what I do in this scenario is that if you're looking for those entries in the oops, I didn't do that. I had the wrong. Okay, so I'm just drawing the trend line here, right? Or this yellow line of where this is at. So you've got this level at 450.71, and this is just from April. I'm just using this as an example for you, right? So the high is you have at 450.71, right? And the bottom of that box, the base of that box that needs to break for it to be a bearish confirmation, right, is going to be the 437.25 on the downside, right? So anytime that it's just sitting in this little box right here, it's, you know, think of it almost like it's like a ship just anchored at sea and it's just waiting, right, for something to happen. Once it breaks this level here at the 450.71, that's usually when the breakout will happen. And then also to the downside, right, it's going to happen here at the 437.25. And you can see it happens here, right? And so on that first candle, as it closes, right, you got to wait until these candles close or they have their peaks or their valleys, and then you can start setting the next ones, right? So if you're just strictly looking at this 22nd of April candle here, right, and you, I'm going to delete this vertical line so you guys can see better. So following me here, you draw this next level here, right? You see it's at like roughly 425.20 at the base of that candle ish, somewhere around in there. It's not precise, but it's going off of this level here, right? And so moving forward this way, you can see now all of the candles where the peaks that it touches it, right? And that it just doesn't break through it. So then from here, once you have your next level, you know, you have your base here. So you would draw it there. Then you would draw it here. Day in and day out. That's how you're mapping this out, right? And so you want those confirmations before you enter the trades, right? So before, you know, as soon as this broke here, I'm looking at this knowing that as soon as it breaks 437.25, boom, if you're trading options, that's going to be puts for you to enter at whatever strike prices those are, right? And if you're not sure of, you know, how far can it go, now you have to go back in time, right? You have to come back here. And if you look back here, you've got a couple of different levels, right? You've got this candle right here where it fills, or you can come all the way back here. But I'm always going by the most recent. So back in time, this would be the most recent candle, right? This would be the next level down here at 436.12, right? And then it comes down here. But then you look and see back here on this candle where the base of this is right at the bottom of the 20 EMA, you can see that level at 425, right? Because you see all of these candles here. If it's touching 3 to 4 candles, whether it's the base of where those opened or closed, or if it's at the top or the bottom of the needles, if it's touching 3 or 4 of those or running through those candles, those are really strong levels of support that you can use to map out your entries and your exits, right? So if you're looking at these now and you draw that support line, we already drew this line right here going off of this one, but you can see if you go back in time, it runs all the way through these candles too, right? And so the past informs the present, which I'm going to cover here in a second. Does all of that make sense? Do you guys see how I'm mapping that out and understanding that? You guys good? Follow me? All right. Let me jump back. So that's your support and resistance. Another thing that you really want to take into consideration is your volume, right? You might have a breakdown or a breakout to the upside or to the downside, or those might be true breakouts or true breakdowns. But if those candles don't really have volume and you're trading options, it doesn't really matter because your options contracts aren't going to move. Share price is different. That's the difference between the share price and the options, right? Your share price doesn't necessarily affect the option contracts in the same way, because when you're trading options, you don't need it to hit the share, the strike price in relationship to the share price. It only has to move towards it. It doesn't have to hit what strike price you aim for. It's just got to move in that direction. And so, if there's maybe there's a 10-cent move in the share price. Well, a 10-cent move in the share price might mean a 30-cent move in options. So there's a big difference between the two that you have to take into consideration in terms of the volatility and the amount of volume that's being traded on a regular basis. It all comes into play. Another thing to consider is your price action movement. And that's essentially your average true range, right? And so what your average true range is, so I'll cover it in the next slide. It's a average number that the share price is going to move over a certain period of time. And in this scenario with the average true range, it's over the course of 14 days. And using the average true range, you can map out your highs and your lows and your mid-level targets as you're setting up your trades or your entries or your exits, right? Another thing you want to really take into consideration is the current market or the stock sentiment of those being is it bullish or is it bearish, right? And the volatility and the trend don't always move in the same direction, right? There's a lot of things that fall under that umbrella of SPY, but say energy stocks or oil stocks might not necessarily run in the same direction. If SPY's breaking down, maybe the oil and the energy's up and those are going crazy, while the vast majority of SPY might end up being, all the tech stocks and all of these other ones. So you have to pay attention to that too. It's always good, especially when you're trading options, that you trade into the wind, they say. So it's, don't trade against the trend. There's times when it actually works, but you really have to know what you're doing in those scenarios. Otherwise, you end up, getting packed up to the Galapagos Islands with no baggage, and you just get hurt feelings later in those scenarios. So your volatility can be low while the market trends higher, and vice versa, right? And just like I mentioned in the chart that we were looking at for SPY, the past informs the present. And I use that as like a last resort if I don't have anything else on the current day to look at in terms of levels, right? If it reaches an all-time high, you have nothing to go off of, right? You have nothing in the past to go off of if you're mapping out that next high or that next possibility, right? So then that's when you would go to the price action movement or the average true range. So in talking about the price action movement and the average true range, it's a volatility indicator that shows how an asset moves on average over a certain period of time, which is that 14-day period, which I was telling you about. And you have basically three ways in which this is calculated. And there's technology. There's an equation to do it yourself, but leverage technology. It's very advanced. It can do it all for you. It makes your life easier. So lean into all of that stuff. So one of the ways is taking the current high and the current lows. The other one is taking the previous close and the current high, and you're basically looking at those levels and the previous close and the current low. And in relationship to that, take Apple for example, right? So this is just from today on the day chart. So Apple's current ATR, the average true range on the 1-minute chart, is 32 cents, meaning Apple's share price moves 32 cents in 1 minute on average in either direction. And that's based on an average of 14 days, right? And so on the day chart, Apple's ATR is 373, $3.73, right? And so it's negative 373 because it's obviously it's to the downside right now, right? If it's to the upside, it would be 373. So in the same token, meaning Apple share price moves $3.73 on average in either direction. So with that being said, Apple closed at 137.59 today, right? So if you're trying to map out the next levels of where this could possibly go on the low end of the spectrum, you're looking at 141.32. Now, if you take that 141.32 and you can see that it's right there, almost at the previous day's high, right? Which is what you really want to break through in terms of entering other calls, if you're trading options, and then also too, if you're entering trades just as investment swings too. And then on the low side, you're taking that 137.59 minus the $3.73, or to the downside. I think it's actually $3.72 is what the ATR is. I think I got that wrong by 1 cent. But anyhow, to the downside, your range is at 133.87. So the possibilities of the true range of Apple in one day, say for Monday, to the downside, on average, this could go as low as 133.37. It's totally possible, right? I say this all the time when everybody asks me, right, about things being totally possible. This is totally possible based on its average true range to the low side, right? If you wanted to get to another mid-level, so then you would take, say, if it breaks the 133.87, so then again, take another $3.73 from there, and you'll get a mid-level target. And you do that on either side of the spectrum, and you can kind of map things out, and that'll end up being generally where your support and resistance lands. Does everybody follow me on that? Does that make sense for the average true range? Okay, dope. Going back. Things to consider before you enter, right? Is there a clear confirmation of the trend? Going back to those 3 or 4 days of the confirmation, right? If you're hesitant to pull the trigger, and this is something that I always ask myself on all my trades, if you're hesitant to pull the trigger, what is the missing link that you need for the confirmation in order to enter? Is it a technical analysis? Is it something in the fundamentals? What is it that's keeping you from pulling the trigger? And look, a lot of the times it's somebody's nerves, or they're anxious about it. But dig a little deeper, peel back that layer. Why are you anxious about it? Why are you nervous about it? Right? Oh, it's a bear market. I'm nervous. I don't know where it's going to go. No, you got to dig even deeper than that. Like, there's something else there that's keeping you from entering that trade. When you don't have a teacher, a master teacher of your own, you are your greatest guide. Your intuition is your greatest guide. And a lot of the times when we get into trades or we exit trades, we don't listen to it, right? We'll stuff that first impulse that we have. And the minute that we stuff that first impulse that we have to pull the trigger on something, it ends up going against us in the other direction. Or it works, it ends up working out not at all. So it is kind of a delicate balance, but ask yourself, what's that confirmation that you need in order for it to enter? And if that question's not answered for you, go and look for the answer. Go and dig a little deeper into that, right? People get out of life, what they negotiate. And the people that get the best things in life are the people that ask the right questions and dig deeper into questions, right? And it's that sense of wonder and the curiosity. Be curious about the things that you're trading and look at the possibilities. What's possible for this stock on a day-to-day basis? Where could this possibly go? In a perfect scenario, where could it go? And if you're approaching your trades in that way, it makes it so much easier for yourself. And another big thing to answer for yourself is, like, what kind of a trade is this for you? Are you day trading this? Are you swing trading it? Those answers matter, because that's going to matter on the time frames you look at, right? For me, I swing trade a lot of things. So I look at the day charts more. A lot of people look at just the day trades. So they're probably looking at the 4-hour charts or the 15-minute or the 1-minute charts. It all depends of the caliber of trade that it's going to be for you. And also, there's sometimes when you don't have a plan at all. You're like, okay, I just see a good entry on the day chart, or I see a good entry on the 4-hour chart. I'm going to figure my plan out as you go. That's fine. I've done it multiple times. I'm sure everybody else has too. But understanding at least the differences in the time frames that you're looking at, the patterns aren't always the same. And then leading into that is you want to look at your risk tolerance. How much are you willing to risk on your trades? And really ask yourself, if the trade goes to zero, are you okay with losing this money? Are you okay with it going to zero? If you're not, then you're probably playing with too much and you should dial it back. Find that threshold, whatever that is for you. If you only have $1,000 account, or if you have a $10,000 account, it doesn't matter the size of that balance. What matters is like what's your threshold of that. And that's where you have to live until you start building up that confidence in your trades, or in your technical or fundamental analysis of what it is you're doing. And also with that, the price targets that you set in relationship to the average true range, or when it was at previous highs or previous lows, or all-time highs or all-time lows, do you have the patience enough to wait that long, right? Everything is basically getting crushed right now, and they're at their 52-week lows, or they're 10% away from it, or 20% away from it, right? Do you have the patience to wait another 52 weeks for something to run up to its all-time high? Do you have that kind of patience to do it if you're investing in the stock itself? And do you have the patience to sit on an options contract for a month out, or a month and a half for it to actually take place, or 2 weeks, right? Some of the best trades you'll ever do are going to be 3 to 4 days, 2 weeks, 18 days, 20 days, whatever that is. You get the ones that last 1 or 2 days, which are fantastic, but they don't come all the time. So you have to assess your patience in relationship to your risk tolerance before you enter those trades. Or at least at a level like when you're in. Sometimes when you're just in, that also helps you too, right? That also helps your nerves. So sometimes just being in is what you need too. Like once you get in, sometimes you just figure it out when you're in there. It's the same with starting a business. Sometimes you just got to jump in the pool and figure it out as you go, right? And there are a lot of times that you can do that same thing with trading stocks and options, but also understand the risk that you're facing in front of you by doing so. And then with your entries being your support, your exits being your resistance. Like I said, the entries and exits are determined by analyzing the previous highs and previous lows of previous days. And just like I was showing on those 3 to 4 days worth of the candles on the breakouts or the breakdowns, right? If those are going to break those highs, you see on that bullish engulfing candle where the peak of that red candle, that next candle there engulfs that, right? That is essentially your confirmation. You're going to end up waiting for another one for it to be a true breakout, to really ride it even further, right? If there's another candle that goes into that the bullish engulf, I can't use my cursor, so that's why I'm explaining it. But if you have that other that next day becomes bullish, right? That becomes your confirmation that you're looking at new levels to the upside. Higher highs and higher lows is what you want for the increase, or lower highs and lower lows to the downside, whichever way you choose to trade, right? And on the flip side, that's the bearish engulfing candles, which would be the confirmations to the downside of when it breaks that trend, right? It breaks the green candles and it goes to the downside, or it breaks that red candle and goes to the upside to the green. Everybody good? Everybody still with me? Follow me? All right, cool. So I had a bunch of tickers on here. That's like the basic understanding of all of those support and resistance levels. Now, like, nobody really knows where everything is going to go. Everybody asked me to look at, wanted me to look at SPY. Now, I don't claim to be the SPY king. SPY queen is definitely Kayla. She's the one who does what it do. She knows those levels like crazy. But if you're looking at SPY, one of the things I want to say when you're trading options, right? And SPY is at 389.63. So this is the target that it's at. When it reaches a strike price or a certain target, you can already start looking $10 to $15 ahead or lower than where the share price is. People is something that's as volatile as SPY, and there's so much volume on a daily basis. You can start looking ahead way down the line, right? Obviously, the further down the line that you go on your strike prices, right? I'm just going to bring this over here. I shared this site with everybody a couple of weeks ago, Optionistics. And this is where I go just to check the options chain. Oh, here, this is what I wanted to do. Yeah. So I'm going to show the Greeks and SPY, right? So you give it a range. Fix this. All right, so 392. I'm just going to up this. It's at 387. You can already start looking at $400 calls, or to the downside, you can already start looking at, like, today I was playing 370 puts, right? You can look 10 to 15, sometimes even $18 lower, right? On things that are super volatile. So from there, I fix the range. Let this reload, right? Okay. So within that range, right, on the low side of the average true range, you've got the 380, or actually that's just support and resistance. That wasn't the average true range. So in terms of looking at the 23rd, if you're getting in calls for SPY to trade options, right, you can look at the 4-hour chart. Right, you can already see. I already mapped this out ahead of time, so you have that 390, the 393.44 when that breaks, right? But you can even take it down to the 30-minute time frame and still see that same level of consolidation, right? As it breaks that, and you can see as this here, if you're working backwards, of where that goes. So once it breaks that, the 393.44, that becomes a crucial level for this to really run. And then also for the downside, right? You take this to the day chart, you essentially have a couple, like 387.05, or you have 385.20. Me personally, because this isn't very strong, and the way that, and I say that because of where it ran up is on the high of the day, and then to the low of the day, and then where it got crushed to, it's just such a small window that it's not a really strong level to me. So for me, what I'm going to do to the downside is that I'm going to look at this for this break to happen right here. Once it breaks below 385.20, the possibilities of where this ends up going is 380.61. Now, if you want to, let me see what this, I had the ATR in here for SPY. I don't know why it didn't show up on my chart. So if you're looking at, so essentially you have a 1089 ATR for SPY in either direction, right? In the last couple of days, this has been getting crushed, $16 to $20 moves. That's huge. That's why the average is so high. But you can map it out from there, right? So from the 389, this could essentially go all the way back down to 379. And then vice versa to the other side. Like I said, you could start looking at in the 400s for calls, right, on the optionistic side of things. And also on a support resistance level, if you're ever unsure of like where the support and resistance is, you can use this website bar chart. I'm going to type this in here for y'all. This is another site that I use, barchart.com, right? And on the left side, over here, once you go to stocks or ETFs or whatever you choose, go to bar chart opinion. And then from here, you can see what the sentiment is of the market. This is a really great resource that I use quite a bit. If you're unsure of the support and resistance, the targets, here's your targets mapped out for you already. You know, technology's already done the work for you. It's not completely accurate, but these are good levels that you can tap into, right? And then you can pick and choose. You can look at pivot points, right? Your pivot points. And again, I don't pay for bar chart. It's just a free service. You can do the pivot points and some of the Fibonacci's, the moving average. You can choose what you want on this, right? My suggestion is to keep things simple, but you can see where its current levels are and where it's going to break at, right? Previous closes at 389.46. The pivot point of where this could bounce is at 389.07, right? So 389.07, which is essentially right here at this candle, right? So it's the same exact thing of this previous close. And sometimes it's off by 5 or 6 cents. Sometimes it's off just a little bit. And then to the upside, right? The pivot point of where this could then reverse to the downside is 397.59. You take this back over here, right? You take the 397.59, which is, I'm assuming, is right here. Let's see, wait, I see. 397. Yeah, so it's roughly right in here. Right along the lines of these candles here of this previous day, right? It touches all these candles. This peak here, this base, this peak, this peak here, so on and so forth. So if that's breaking, let's just say hypothetically, right? We're going to say that this goes to the downside, right? Because I think that this is probably, I think Kia mentioned this earlier in the chat earlier today, that SPY can really gap down, right? So if you're going back in time and you look at the gaps on SPY, you're really coming back down here to this level here, and you're mapping it out from, it looks like February, right? So if it breaks that, that level at 389, shoot. My bad, y'all. Get back on track in a second. Everybody follow me so far? No questions, we good? We'll let the SPY get back on track. I'm actually going to close this bar chart too. It always, having bar chart opens, it always makes my computer run incredibly slow for some reason, which is weird. And I'm just going to take off this average true range and the MACD just so it keeps the chart less cluttered. So it's Apple, put this on SPY. So coming back to this level here, right? So where this is sitting at if you're taking it from the 385, this is sitting right at the 20 SMA and the EMA 5 crossover. And usually when that happens, it either breaks out to the upside or it goes to the downside. And if this breaks this level at the 385.20, this is going to break to the downside. Now, the possibilities of where this can go, you can already see that it's pretty clear, right? You can take it to the longest wicks here. And this is already going to be a massive drop if this takes place. Again, it's not set in stone, but it's a possibility, right? And I'm only doing this like in terms of working backwards, right? Because those are the farthest levels. So from here, but what I'm looking at on the day chart is that I'm looking for this essentially like your next target. If it breaks that 385, you're basically looking around like 380. If you take the bottom of this candle here, which is essentially going to be here at these EMAs almost, right? This essentially falls to 380.53. That's the possibility. If that breaks the 385, your next target becomes 380.53. And then below that, you essentially go to 376.64. That's the possibility. And those are hard falls because you have this huge gap here, right? The SMAs, they obviously always bounce off of the SMA. So for instance, if you're here at 385.20, I wouldn't enter a trade right at 385.20. I would give myself a little bit of a cushion, right? I would give myself a cushion of 15 cents, 20 cents, right? Because then you can see how it responds. If it hits 385.20, goes to 385.18, it might bounce from there. You want to give yourself a little bit of a cushion in between your entry points to see how it responds when it breaks those. Sometimes it fakes you out, right? Just like in basketball, hits you with that pump fakes, and then it gets you with a Euro step, spin move, in the other direction. And then you're crying because the next minute you're down 40%. But that's where that sits, right? And essentially, this could gap down hard next week. So that's a possibility. Y'all see the same thing too? Cool. I want to go look at, so that's SPY. That's my thoughts on SPY. I think probably Monday it's going to continue to gap down. Obviously, all of the time frame continuity, right? So this is, I don't use the strat, but this is strat related. And I have this on my chart because it's all the time frame continuity, right? It tells me the confirmations of the charts. If I'm swing trading, then I want the day chart green. I want green or red, depending on whichever way I'm going, right? I want the full confirmation of these. If the month is bullish or the quarter's bullish, but I'm only day trading, I don't really care about those. It doesn't really matter. If I'm only day trading, I don't really care about the week. I care about the day. So that's why it's important to have a plan so you know what you're looking at in terms of time frames, right? And your time frame continuity on a day chart might not be the same as the time frame continuity on a 4-hour chart or on a 1 minute chart. So you have to have a foundation of what it is you're doing in terms of the trade, because the time frames are different, the confirmations are different on them as well. So, but in general, if I'm day trading or I'm swing trading and I have the day chart red, the week chart red, and I'm going to the downside on something on puts, or I'm trying to average down, if I'm averaging down on a stock, I'm probably going to wait. I'm not going to go in yet. I'm going to wait until this turns green for it to have that bounce right to the upside to where it levels off, knowing that's a support level that I can go in and buy more shares, and vice versa for options. If if both of them are red and I'm going to play puts, then that's my confirmation to enter the trade on whatever time frame it is. Let's look at Apple. So even again with Apple, with what I was saying, right? So from the 133.87 to 140, 41.32, this is the average true range of that based on where it closed. So that's your first low level target to the upside, the 141, and the 133 target to the downside. That becomes your target too of possibilities. And then if it breaks through those, that's when you know something really great is going to happen in terms of your account, right? Because it breaks those, then it's a really, really strong confirmation of where it's headed to. But in this scenario, that if you're doing, you're looking at Apple calls in options, I'm not even going to consider it until 140. Because on the day chart, if you enter it before that, right, you can scalp it. You can scalp it really quick on smaller time frames, same way that you can in shares. You can scalp it on a 15-minute time frame, 5-minute time frame, whatever you want to scalp it on. It's entirely up to you. I always mess around and always say that I look at the 1 second chart. Looking at the 1 minute chart, or the 1 second chart, I want as much real-time data as possible, right? So that you're not getting delayed information. Why do I want to be 1 minute behind in what the share price actually is when I'm mapping out my support and resistance levels? I'm going to look at a lower time frame. Yes, the 1 minute chart moves incredibly fast. I don't do it with say SPY or Apple, things that are super, super volatile, because then it's too much. I'll lower that down to a 3-minute or a 5-minute chart and map it out that way if I'm day trading something and looking for those confirmations, the quicker confirmations. If I need the quicker you need your exits, the lower the time frame I think you should be on, because you can catch them a lot sooner. So I'm going to just put this on the day chart, because that's what I look at the most and when I'm doing the trade. So if I'm entering calls or I'm entering trades, my entry point for this is going to be at the 140.70. That's where I'm going to start to enter at. Now you're like, okay, well, what's the next level? Well, it essentially it's going to end up filling this entire gap back to the upside, right? To 147. This becomes a stronger possibility, right? And if you take the average true range on top of that, which was the 372 that I mentioned before, the 141, you're almost there at that level, right? It essentially, you're gonna be looking at really right in here, right? Of the base of where this closed at and the base of where this opened. This is probably going to be your first target that you want to keep in mind. The 144. Right? But like I was saying, even though your target is 144, that doesn't mean that you can't buy a 150 call, because as soon as Apple is at 140, they're already buying 150 calls. They're already buying 155s, right? Because it only needs to move towards it. Obviously, you going closer in the money is less risk. It's safer, right? But the only downside to that is that the contracts are more expensive. The further out you go, the more risk and the more lucrative it is. So you have to decide for yourself what you're willing to risk. And it's all really, your targets and your entries and your exits are really all based on what your bank account says and what it allows you to do. Now, in the options world, right, let's just say you choose a 150 call, right? When it breaks the 140, or even let's just say a 145. We'll just say 145, right? So the last time that it was 145 was roughly 2 days ago. So at minimum, worst case scenario, you might be holding this contract for 2 days minimum. Let's just say that's the way I always approach my entries and my exits. That I have to be prepared for that in a worst case scenario. It might not do anything at all today, but I might be waiting 2 days for it to go back. So keep that in mind when you're looking at trades. Now, if you choose, let's say you chose the 150, right? The last time that it was at 150 in that range was the 17th of May. So 3 days ago, you might be holding this at minimum for 3 days. So do you have the patience, going back to what I was saying in the lesson, do you have the patience to hold this trade for 3 days for it to really take fruition of what your plan is, right? The 150 strike price. So ask yourself those questions. And it's the same to the downside. It's the same thing. Now, when you're looking at entries and exits, right, let's go to the options profit calculator. This isn't entirely accurate. It doesn't take into account, it doesn't take in like massive amounts of volume and volatility, and it changes from time to time, but this is what you can use to map out your calls. In terms of I always tell you to automate your trades. You can use this as a guide for you to automate that process and make it easier for you, right? So I'm just going to say, I tend to look at 2.5 to 3 weeks out in the trades, right? So let's just say here, obviously the 20th May just expired. So you got the 27th of May. I'm going to look at, I'm going to look at next week, right? 137. So I'm going to look at the 145, right? The 145 at 66 cents. I would take this over here actually, so I can see the other volume. Okay, so your 120, your 527 calls, right? So if you do, I gotta change this range. Change this range to 150, just so it gives me. So if you look at the 145 calls, or where is the most volume, right? You see here, this is your volume, this is your OI. So the 145s. 145s are the highest, right? You look at the 140s. 140s are okay, but everyone's leaning towards the 145s, right? 25,000 in volume, 9,200 in the open interest. And then obviously you have your delta and your theta, all of your Greeks over here, right? If you're looking at the 527 puts, you got one at 135. Take this lower, right? Take this to 125 on the downside, right? Take it to where it goes to 133 at least. So then if you look at the 125, 125 is a little bit too far. I personally wouldn't look that far. Not on the puts, not yet. I would start looking at like a 125, like around 133, 132, around in that area, maybe even soon, maybe even just a tad sooner. But this is where you can go to map these out and just get a gauge. If you don't register for it, this isn't real time, but if you register for it, you get all the data in real time, right? So let's just say, I'm just going to say 10 contracts, right? Put this to 130. And you can map out these levels, right? So the levels you're looking for, your first target ends up being, essentially the 140, 132 or the 144, right? So then 23rd of May, which would be Monday, right? So really, this is where you're going to end up being, right? So you need this to get to 91 for you to really have a chance at end up making money, right? The 143, it's got to move 148%, $1.64. Is it possible? By the average true range, it's possible, but this is where you can start mapping out what your percentage points are in terms of where you get in or get out of trades based on your strike price, right? Yeah, and you see, obviously, like next week is, let's see, the 123. Yeah, so that would be Monday. And you map it out based on that here. It's not exactly precise because this might actually change based on volatility and volume. Doesn't take that into account. This is just a rough guide for you to use. Make sense? To answer your question, LR, what's a good minimum and maximum for volume on options contracts? So for me, when I'm choosing my options contracts, I'm looking for 2 to 3 times the volume of the open interest, or 2 to 3 times the open interest than the volume. Generally, I want my my implied volatility, my IV, to be lower. Let's see, minimize this real quick. Yeah, so for instance, on some of these other calls, right? These are at 50% implied volatility. I want the volatility around that 60%, 60 to 80%, right? Because those have a lot more room to run, right? Because they start getting really maxed out. The MACD starts getting crazy around 150, 160 in implied volatility. But I'm really looking for it to be at least minimum in volume around that 600, 700 range, like minimum, because that can easily move into the thousands right away. And if my volume is at 600, then I want my open interest to be at least at 9, or I want that to be at like 1200, or vice versa. I want the volume to be at 1200 while maybe the open interest is more than that. So that's what I'm looking for in the trades when I enter. Nobody questions. Cool. Let me, I'm going to go to another ticker that you guys put on the list. Somebody was saying to look at BBY. They have earnings on Tuesday. So obviously this scenario too, right? So this is consolidating here already. So this becomes this level 2. 74.02 becomes where I would enter trades on the calls side of things, right? Your next target to the upside from that beyond 74.02, your first target's going to end up being 76.44. Now let's just say maybe you buy shares here, right? You buy 100 shares, whatever, right? If you're day trading those, look, you could swing trade those shares and earn $4 per share on every single one of those shares, if that's your target, right? If you're trading options, your first target is a 76.44, right? Your next target becomes the 79.64 to the upside, right? And if this is at 72, I'm already going to be looking at, let's just say their earnings are good, and this goes against the trend of where it's currently at, which is SPY going to the downside. Let's just say that this goes to the upside. I'm looking for this to at least go to the SMA in terms of a target, right? It's always a target. 82.66 is what I would map out. And you see it's not really, it's already past that, but just know that the SMAs, the EMAs, they're always targets. It's where a lot of things bounce. It's where a lot of things have to break through. So those are always resistance points or support points for you. And in this scenario, I'm going to be looking at, a $75 or an $80 call 2 to 3 weeks out. You could take it a little bit further, right? Because if you're going to choose a $75 call, right? Last time it was there was the 19th, yesterday. So at minimum, you might have to hold this for a day. And you find out the average true range, right? The indicators for that, I just use the average true range here, just is the script name. You click on that, right? Pulls up. And then you can see, right? So this basically moves on average 14 days at 470. So you map out your levels in that way already. With the average true range on the low side target of this, you're already looking at 76.44, right? And it's almost exact. And then also to the downside, which it essentially becomes right here towards 68. It's almost to the T, exactly, right? And almost to the T of the ATR is where this was pushed down, and the same thing where this got pushed back up on the bounce. So those become your targets. Now, if I'm looking at, let's look at PBY. Does that make sense for those? Rise, you sent me a direct message. You were asking, where are you finding the volume? With the volume on, options contracts, it's all obviously right here. But on the chart itself, you can just have a volume indicator. I know Kayla has used some. I use it from time to time. I don't if I only really use it if I'm really unsure of a trade or what it's going to do based on the movements. But you can put the volume indicator in there just to make it easy for yourself, and you can see the volume on the candle of what that is. Which you can see. I think it's clogged into my screen. Oh yeah, you can barely see it right here. That's the only downside. If you clutter your charts, you can't really see some of the indicators. So the volume on this candle was 4.85 million, right? And you can use these of being able to map out like what's the strength or the weakness of your targets, essentially, right? I'm just going to take this back off. And I just used a basic volume indicator. Just go to indicate. This is just trading view. I just use this one here, just a basic one, and start it. And I don't use all of these all the time. They're just start as favorites because I've used them in the past and I use them from time to time and I alter them. But that's how I use that in there. Your average true range, though, is already computed for you. You don't have to do anything. The only thing you have to do is really the math of, okay, this close at 72.36. This runs 472 on either direction. So then I'm going to take 72.36 plus 472, and that's going to be my low side target to the high side. And then I'm going to take the 472, the 72.36 minus the 472, and that's going to be my target to the low side on the downside, which essentially falls right where the highs and the low of today were. Essentially, it's almost exactly where it should be. So, in that scenario, if I'm throwing out earnings, right? Earnings plays for this 74. I'm going to take this to 80. It's here. I like to play the weeklies. It's obviously a lot more. It's a lot more risky to do that, but they're far more lucrative. So, 527. These are puts. 67 calls. Okay, it didn't. And because, like I said, this isn't real time, so it doesn't update it. It's all updated based on today. So I'm probably going to be looking at, I'm going to change this. I don't know why they don't engage me. I'm going to look at the calls by themselves because it wasn't really given. Oh, I see. Okay, there we go. It's a better range. So if I'm looking at this and that first target becomes the 76, right? I'm going to be looking for the volume again. I'm looking for things that stand out, right? So this is currently right around 72. So I'm kind of looking to see where this is going to stand out. And you start to see at the 75 and the 80s aren't really doing anything. Well, the 80s actually. 80's got 900 in volume, but it's got 5,000 in open interest. So I'm going to be, I might take a risk and do an $80 call for 527 on the assumption that the earnings are going to be good. That's a possibility to do that, right? And the contracts are $2 essentially. The other option that I would actually look into is probably the $75. If you wanted more, you wanted less of a risk involved, right? But you're going to pay more money. You're going to pay $385 for the contract for that, right? And if you look at, let's look at it to the downside for the puts. So if I'm looking at puts to the downside, right? So this could potentially to the downside of 68 if that breaks that, or even below that 68. So it actually go puts if it breaks the 72 where it's at, you could run puts there, run it down to 68, or you could enter at 68 and write it back down to, this is Best Buy, by the way. Stretching this out. You see that this essentially, like once this breaks 68.97, then this basically ends up, you can already see that it's already sort of in the middle of this candle, that it's probably going to end up filling that candle, right? And you can see, make this bigger, that if it's here, it's going to fill this candle here, and you can already see that it's also right where this gets pushed almost, right? So I essentially take this here to this target, but I think it ends up probably being right here at 66. So if it breaks the 60, if it breaks the 68.97 to the downside, it ends up falling down to 66.84. That becomes your target, right? So then coming back here to the optionistics where you're looking at the puts. Again, I'm looking at what stands out to you in terms of the most amount of volume, the most amount of open interest, right? You're looking at the $70 puts, or you've got 65s. The 65s, because that's so high in volume, you know, it's almost twice. Yeah, it's more than twice of what the 70 is. I'm probably going to be looking at the $65 puts, right? And again, it's all a matter of your risk of what you think is going to happen. So that's where I would play Best Buy if I'm trading options. I would probably look into the 527 $65 put for 247, and then the call before what I said it was, the 75 for the 80s. Y'all follow me? Really good delta theta numbers. Yeah, Jesse. So what are good delta and theta numbers? So high delta, low delta. Your delta and your theta, you know, this is obvious. You can go into the options, give me options training that I did, and I talk about the delta and the theta. So your delta is going to be, if it says 0.42, right? So that's basically saying it's going to move $42 for every dollar move in the share price, right? And on the flip side of that, your theta, if it says negative 42, then theta is you're going to lose $42 per day that you hold that contract in terms of, the share price movement, right? So you want your delta to be higher than your theta. All right, let's look at somebody. There were quite a few people who wanted me to look at AMD. So let's look at AMD. I don't know if Ray's in here, but Ray probably already talked about AMD. It's probably already on his watch list for tomorrow. Like I said, I don't use the strat, but the Wealth Squad is pretty strat heavy. So usually looking at something as volatile as AMD. So you look at this on a 4-hour chart, right? So in terms of so you can see the 4-hour chart is bullish. But if you go to the day chart is bearish, right? So that's what I was talking about before. The sentiment is different. So here's the scenario of you need to decide what it is you're doing. Because if you're day trading this, it's okay to do on an hourly basis. But if you're swing trading this and you're in calls, you're probably going to get crushed because the day chart is bearish. The week chart is bearish. The only thing that's up is the month, but it doesn't matter because you're day trading it, right? So if I'm day trading it, I wouldn't be doing anything to the downside because that's where it's going to end up going. But if you're looking at it on the 4-hour chart, it's obviously bullish. So know what you're doing in these scenarios. So again, I'm going to switch this over to AMD. And I forgot on the last two for Best Buy and Apple, I should have wrote the calls and the puts that I had in mind in the chat. I'll do that for AMD. Ray probably already has this mapped out already with entries and exits. But in that scenario, right, you want this. So for Monday, the 23rd, you want this to break 93.50 to enter calls, right? And then that next target, essentially, if you're doing it on the lower time frame, these become your targets too. You can take it up to here, which is where I would take it, right? Of where it's got to fill, the 98.85, but also know that you have these minor targets here, here, and here that you can take profits. So this little area of consolidation here, this is a really strong resistance. Why? Because it's also the resistance for these 4 candles here. And you can do that, you can see that better when you draw the line, right? It's basically at the base of these. Here, right? Those just kind of sit on it. And then these are where all of these peak. So that becomes a true resistance level. So when this breaks, calls above 93.55, just know your first target is 96.37, right? You buy 10 contracts, you want to sell the majority of them at 96.37 and then use the rest to run up to that target at 98.85 on the 4-hour chart. And then to the downside, you have puts below 88.48. Now AMD's average true range is 494. Now this closed at 93.50. Now if you add 494 to that, you're basically here at 98.85, right? It's almost that same exact level. And then to the flip side too, on the downside, the 93.50. So if I'm coming here, this breaks 88.48 to the downside, your next target really becomes, at least for me, of where I would take it, is probably right here where these candles are, where these bases are. You could go all the way down here, but you have all these these smaller resistance points. So the 85.79 is where I would take that target. So if I'm entering calls, puts, calls and puts. Bear with me 1 second. All right, take this down. So this breaks 93.50. I'm already gonna, because this could already get to 100, I'm already looking at $100 calls in terms of risk. You could possibly even do a 105. That's pretty far out because the last time that was at 105 was the 18th of May, a couple of days ago. You got to be willing to hold it for 2 or 3 days for it to hit that price, right? If you buy it on Monday, just know that next strike price, how I was saying, the weekly, it's going to expire on Friday. So you're going to lose theta. So you got to be conscious of that. So the 93 I'm looking at here, again, what stands out to me? I don't know why that takes. I got to do them at just one at a time because I don't like the layout of that. Take this higher actually to 100. 105. So if I'm looking at plays for AMD, right? It's at 93.50. I'm looking at what's standing out. Already the 100 stand out to me. Is at 37,000 in volume. Contracts at 116. Expiration is at 527. And then your delta's at 21. Your theta's at 17. So the delta's still higher. So this, oh, sorry, wrong one. Yeah, 18, 24 and 18. This is what I would look at, for AMD. Calls above 93.50. Calls above 93.50. And I'm looking at the 527 AMD $100 call, right? Calls above 93.50. That's the play that I would consider if I'm looking at AMD. If you want a little less risk, then I would probably take it down to the 95. You just pay more money. You pay 285. But you have a lot of volume. You've got a lot of open interest on both of those. Those are the two plays that I would look at on that side. Now to the downside, where you have the 527 AMD, and some of you guys are probably already in these. That's also what I would look at too. Now to the downside, you got, it breaks at 88. This essentially falls to 85 with the possibility of even going down to 83. So with that in mind, let's put and again, that's just on the 4-hour time frame. Yo, Michael, you were asking if I was looking at Tesla. I'm not going to look at Tesla. I don't play Tesla. I'm not looking at Tesla. So you're 85 if you take this one here. So again, I'm looking at what's going to stand out, right? I'm looking at the highest amount of volume, the ones that really stand out from where it's at. You've got the 90s. You can play the 90 AMD, the volume at 12,000, 3,700 in open interest. And I'm also, let's see. Yeah, even the 88 or the 80 or the 85 to me are all opportunities if you do that, right? So you take the 527 AMD, $90 put, and you take the puts. All right. Puts low, 88, 48. Or you could do the 85, right? You take the 88 or the 85. Same expiration date. Those are the trades I would, if I were to get into the trades, those are the trades I would enter for myself if I was trading this. Oh, man. I didn't mean to send that to one person. I meant to send this to everyone. So the AMD, I'll resend this real quick. So you're going to do the 90 puts, the 88, or the $85 put. Right? And then puts below 88.48. That's where I would play AMD. And maybe that coincides with what Ray has already talked about, because I'm sure that's already on his watch list already. Maybe it's not. I got it. We got about. I'll wrap this up in about 10 minutes. Be conscious of your guys' time. Does anybody else have any other charts they want me to take a look at for them? I guess. Let's see. CNPPA. If you guys want to, let's see. Ray already put these out on his watch list, I bet. Let's take a look. Because Ray's been playing these for a minute. Let's see what else I had. I had Coin, SQ, Snow, HD, Uber, Starbucks. Yo, Gullah, the recording stopped. It still says that it's going on my end. Yeah, it's still recording. I'm gonna wrap this up, guys, real quick. Chit, ABCL, Roblox. PA. Gola, I don't know what Pan W is. Oh, Palo Alto. I don't think I'm gonna do Pan W, the one that Gola said, and I'm gonna do Uber. And then I'm gonna wrap this up real quick. So like, and even looking at these, also got to make sure that you do your due diligence too on these, right? All right, so I'm looking at these on the 4-hour time frame. So looking at this on the 4-hour time frame, obviously the calls above the 478, right? So that first target becomes 491, which is a huge move. That's a huge move in options. I want to look at this on the day chart real quick. Yeah, so see, even on the 4-hour chart, it's not precise. It hits here, but you could probably even take it higher, right? So the 491, or you take the puts below 460.52. And then your first target for this one, for Palo Alto, basically calls above 491, first target becomes 504. And then if it breaks to the downside at 460.52 for puts, I mean, that's a huge gap. This could essentially go all the way to 445. Really, right here where these two meet almost. But I would say your first target here at 460 hits this 445. So 445. So looking up puts to the downside for this one, Gola, is that if I'm looking at this, I'm looking at like 478. The 450 put stands out to me, but it's also really, really far out of the money. So in that scenario, but also like that's actually pretty strong volume in OI compared to everything else. Everything else is in the hundreds, but you have this at almost 700. So my guess with this on the put side, like that's a pretty strong sentiment, I think. And considering these two are the most down here, the 435, 440, in this scenario is where I would compare and contrast the information. These all seem to have the most activity. So these are the ones I would look at. If you want to play it safer, right? The 460 is where you would enter the puts. So I would also look at probably to be honest, the 450 is probably what I would play if I was playing it to the downside if it broke that level. I wouldn't go heavy because it's so far out of the money. That would be something I would scale into. Shoot, I didn't mean to do calls and puts. Dang it. Now, if I'm doing calls on this one, same thing. Up to 490, 500. Gotta take this further. So if I'm looking at this one, I'm taking this probably to, again, what stands out? The 500. 500 stands out right away. It's got almost 3-4 times the volume. The 495 and the 500 for 527. I would probably play the 500 because of the open interest is different, right? This only has 53 as opposed to 317 for the 500. It's obviously pretty risky though, because it's pretty far out of the money. But if I wanted to play it a little bit safer, I would probably even look at the 485 or the 495. But I think in terms of those two trades, I would look at the $500 call for 527. Because as soon as this crosses 491, that $500 call is already going to be starting to go in the money, or people are going to start buying all those contracts. Make sense? Yeah, so Spike, what happens when delta is significantly lower than theta? Does a contract need to be profitable quickly in that case? Yes, so if your delta is lower than your theta, you don't want to swing trade that. I would. You want your delta to be higher, right? Obviously, because you're not only losing the time decay of your theta, you're also losing money on your delta. So it's not going to make sense for you to swing trade that. Yeah, Greeks can really, really crush you. And also too, the thing is when you're playing something with really high Greeks and has a whole lot of volatility, like BBIG when that ran up, and some of the other ones, right? Roblox when that ran up crazy. IV is at 300%. If you're playing anything over 200%, IV 250, 225, you're like, as my aunt would say, you're cruising for a bruising. That's what my parents would always say, cruising for a bruising at that point, right? It's just so much volatility that it can go in either way, and the Greeks are going to end up crushing your contracts. It might run $1, but your contracts might not even really move because there's so much volatility with it. So you want to pay attention to those. All right, I'm gonna do Uber just because I put this one out the other day in Research Admins that the CEO bought 5 million shares or $5 million worth of shares. And really, you know what? The move today, which I should have put this out too in my research, is that the move on this would have actually been puts. Actually, this was probably a really good trade to get into. But for Monday, I've already put the entry at the 24.22. That's the entry for getting into that $30 call that I had put out to everybody. But on the downside to this breaks 22.40. Switch this over. Take this to Uber. Right, this could essentially fall back down to 21. And I say puts would have been a good move because today, right, this is today, but when this broke here at 23.83, this fell all the way down to 22.43. That would have been actually a really good play to get into for puts. People probably could have ate off of that. But on the flip side and downside, right? So Uber basically moves $1.85 in both directions. So from 23.35, you're basically looking at right where it's at this 21.67 level of where that target's going to hit. So in this scenario, we're looking at the $30 call. Right, we already talked about that. I want to look at the puts actually. We already talked about that $30 call. That's my recommendation when it crosses the 24.22 is to get into the 527 or the 617 $30 call. And then on the put side, right, that breaks below 22.40. I'm looking at probably further too. I need to go lower. 16 and a half. So even for 527 puts, I just want to scroll here and look at some of these other ones. Yeah, so the 617 puts, right? So 22 and a half stands out to me. It's got 11,000 in open interest. 617, $22.50 put for Uber. That stands out to me. And then also see in this scenario, the 610, $23 put, it has so much open interest, but it doesn't have any volume, right? But this volume to me is pretty alarming. This is a red flag for me, not a red flag, meaning like it's something that I would pay attention to. I would keep on my radar, right? Because this is basically saying there are 24,000 people that still have not closed their contracts for this put, but it needs volume to move. That's something I would actually keep my eye on, because that's a lot. It's way more than 6.3. Nothing is even really close. 527. If you're doing 527 for next week, I would look at the 22 and a half. 22 and a half for Uber. You could even do the 21. And that's all puts below when that breaks 2240. When that breaks 2240 is when I would enter those. Everybody follow? Good deal, y'all. Hey, I want to wrap this up. I want to be mindful of everybody's time, but I want to say this. If you guys have tickers that I didn't get a chance to look at, just go into the stock chat, in the general chat, pull up the chart, tag me in the chart. I'm happy to answer questions for you. I'm happy to give a breakdown on some of those tickers for you. Just, utilize those rooms. I'm in there every day. I try to answer as many questions as possible. So if I didn't get to your chart tonight, tag me in the chat over the weekend, and I'm happy to break down charts. And it's not just about what we as providers see in the charts, right? Everyone says, what do you think? What do I see? I really want to know what you guys see. I really want to know the levels that you guys are mapping out for yourself, because it helps us better understand what kind of a trader you are and how well you're doing, or how well you're not doing. And it actually gives us an opportunity to be able to cater our lessons and our classes to your strengths and weaknesses. So tag me in those things. But I appreciate all of you who stuck around and who came to hang out with me tonight. So tag me in all your stuff, y'all. And I'll see you in the Discord. Good stuff. Have a good weekend.